Traders, what an eventful weekend to say the least, with all of the meme, craze that has gone on. On that note, one thing that I will say is that I think it gives us a little bit of insight into what the next 4 years could be about. And as it relates to the market, stock market, I think we could see increased volatility, which could spell increased opportunity for all of us, which is a net positive. So for me, that's really the only thing I'm concerned with going forward. Now, for this week, my focus will be on move-to-move trading. But with that being said, I do have a few potential A+ opportunities set up intraday and swing for the upcoming week. So let me share those ideas with all of you. So first one is DJT. Now, while unlikely, and this scenario appears fairly unlikely to me, given what has transpired now over the weekend with the meme coins, insane market valuations of the Trump coin, it's worth being prepared for a potential outlier scenario. So what is that scenario? So essentially what I'm looking for here is ultimately increased FOMO overall, increased attention, and I'm hoping that it results in a significant ramp higher in DJT, closer to 45s, mid to even high 45s Tuesday morning, coming back into a major area of resistance, major area of supply and failure from pre and post election back in November, end of October, and beginning of November from last year. So that is ideal for me. If that happens, if we do get a gap up in the morning, or if we get a morning chase, that's when I'm going to be on very high alert for supply to hit the tape. And for an intraday fade versus the high of day. Now, if a downtrend does begin to play out and materialize as the morning progresses, then I'd look to trail my stop, and I'd definitely look to take a piece as a swing overnight if we close in the bottom quarter range and we close a week on the day. And I'm really categorizing this as a potential sell the news opportunity if we do get that gap into the mid to high 40s, high 40s, even approaching to 50 as an outer line early morning, 4 to 5 a.m. But again, extremely unlikely, but I just want to be prepared in case this sets up similar to the sell the news that we saw back in November, because what's obviously happened over the weekend has been fairly crazy, but the markets can remain irrational a lot longer than you can remain solvent, so important to keep that in mind as well. So potential sell the news and DJT is on my radar. Next up is FNMA. FNMA, this is one that I actually missed my bounce entry that I was looking for on Friday for an intraday position as well as for a swing position. Now, I'm certainly not going to be chasing it high 6s over 7s. Definitely won't be doing that as we come into 750s and the recent high 780s. I'm not going to be doing that. The risk reward is not skewed in my favor at those prices. But what I am going to do instead is going forward in the coming days, ideally as the stock consolidates, as it digests this recent surge, and we get some price stability, if we're able to consolidate and start to form a range over multiple days, I am going to be looking to build a position on dips as we come into 6, dip below 6 with a stop right near 5. And I'm going to look to accumulate a position there for a swing position going forward. And like I said, ideally, as long as the narrative remains intact on dips, as long as we hold above 6s, 550s on dips, I'd look to accumulate for a swing long position, and ideally a lengthier consolidation forms now, allowing the stock to really digest the current move with a contracting range, skewed risk reward for leg 2. Next up is Reddit. This is a very straightforward one. Reddit is really just, as the stock continues to consolidate here, we have a contracting range. We now have converging short-term moving averages, and of course, volume as well is beginning to consolidate and die down, all potentially resulting in a rubber band effect, leading to a potential breakout over 180. So if the stock can push over 180, and if we do get elevated R-vol, a quick push and burst in volume over 180, then I'm just going to look to enter long versus the low of day. Now, Reddit's obviously a higher, on the high-end ATR as it results of some mid to large caps. So keeping ATR is close to 10, I believe. So keeping size and risk in check is definitely going to be very important, as to not get shaken out, essentially, of the position on any pullbacks. So that's going to be something that I keep in mind if we do break over 180s with a stop near low of day, depending on the intraday setup that transpires, of course, but keeping size in check, so that on any dip, any high or low within that uptrend, I'm not sized inappropriately to the point where I begin to manage the trade incorrectly because of size. So that's something to keep in mind. Now I'm going to be targeting high 180s near recent highs, near 52-week highs, where I'd look to take off a significant portion of the position and trail the rest against the low of day. Very similar to the name that was on the radar for a breakout on last week's watch list. Elevated range and looking to trail against the low of day, similar to the plan in SMTC. Now, crypto-related stocks, starting with Hood, and obviously these all need to be on radar given the new all-time highs in Bitcoin at the moment, given the meme mania that's going on right now. Bitcoin's fresh from making new all-time highs, and we're experiencing meme coin craziness. And so it's really, for me, worth keeping an eye on all crypto-related names, be it Hood, be it Coin, be it MSTR, be it IBIT, Mara, Riot, etc., etc. And Hood, for me, what I've noticed, it's shown really impressive relative strength year to date. And I like this in terms of a long. I like it closer on dips towards 46, 45s near this rising 5-day. It seems highly unlikely now, given what's going on over the weekend. But if we do get any dip, any flush, being prepared for that scenario into this sort of 46 region, 45 region, I definitely like it for dips and for a long against low of day for consolidation and a leg higher. But on the flip side, with the craziness that's going on, I could also see a world and a scenario where we gap 50 plus, low 50s. On excitement on FOMO, and then looking to see if we get any exhaustion, any blow off, any trend break confirmation for some short scalps intraday. I think that could be quite interesting for me. Next up, similar plan is MSTR, and again with the level of speculation that we're seeing now, FOMO just being off the charts right now, Bitcoin at highs. I'd imagine we could see a major gap up in MSTR, of course. They just announced yet again that they've increased their position and their holdings with Bitcoin. Now, I'm not going to look to chase this long on a gap up. Certainly not going to happen. Instead, looking left, multiple failure zones within this, anywhere from 425 to 445, 450s within this potential band of major resistance and supply. If we do get any extension into this region and failure and a lower high intraday, then again, keyword here being intraday, I would look for a short scalp and an intraday reversion back to VWAP if that were to happen, and potentially back to a 2-day VWAP. We'll have to see how that plays out. Now, other names on watch, a part of the crypto kind of theme, I've mentioned a few of them already, but again, BTCT, more in the smaller scale as it relates to capitalization, we could get an outlier move there. We have Coin, we have Riot, we have Mara, and we have IBIT, of course, always worth trading relative to the underlying. Now, overall for the week, there should be no shortage of gappers, of in-play names tomorrow and over the course of the week from small to large cap. So it's really going to be essential to narrow down that focus and to double down on stock selection. All right, don't overwhelm yourself. Don't spread yourself too thin. Now, while a lot is going to be moving, excitement is going to be off the charts. It's also important to remember that just because something is moving doesn't mean that edge exists there, or doesn't mean that edge exists there for you or for me. The most important thing is just stock selection, risk management, and sticking to your process and your plan. Another important point is that when and if volatility increases, that will automatically size you up. You don't actually have to size up in its own. All right. And then lastly, something that I spoke about at length in my latest IA meeting as well, is that I'll be paying very, very close attention, SPY and Qs, to key levels, key resistance bands there to see if those inflection areas are breached. And if they are, just keeping in mind some notable setups like in Amazon, like in Google, like in Meta for reactive positions. So that's everything for the week. And as always, would love to hear what you have on your radar, what your thoughts are, general ideas, thoughts, plans, and what charts look most attractive to you. So drop it in the comments. Good luck for the week, and I'll see you all next week.
So you're an active trader, not doing as well as you want, not doing as well as you deserve, and you just can't figure out why you can't become profitable no matter how hard you try. Well, let me show you why. This is your competition. The traders in this room. This room right here is full of elite traders, some of whom are making 7 and even 8 figures a year. In fact, our top guys have made nearly 20 million each in net trading profits in a single year. Let's head to my office so I can share more. So you're probably used to seeing videos of lavish trader lifestyles, trading gurus trading off of a laptop for an hour a day, heck, maybe even 15 minutes a day, and then them relaxing on some secluded beach for the rest of the day. Well, all I can tell you is that our traders train like pro athletes. They live and breathe the markets and are continually working on their trading skills. Because at our firm, that's what we found it really takes to make it in this game. I'm Mike Bellafiore, co-founder and managing partner of FNMA Capital, one of the world's top proprietary trading firms located in Midtown Manhattan. And we're always looking for trading talent to hire and develop. And not just to trade in-house on our desk, but also to trade from their own home, entirely using our firm's capital. And we have numerous traders doing just that, allowing them to make upwards of 7 figures trading the firm's capital without risking their own money. But to even get a shot at something like that, you need to have the right training. That's why we're doing a new free online presentation in which we share how you can get an interview with SMB to become an in-house or remote trader, trading firm capital without risking yours and gaining access to all of our firm's coaching and resources. And the best part? You don't have to be a profitable trader yet. In fact, we prefer to mold profitable traders with our methods and our techniques. That's why we have just 3 simple criteria that can earn anyone an interview. We're looking for highly ambitious and determined traders who fit our culture first and foremost. So if you believe that could be you, sign up for the free 1-hour online presentation by clicking the link that's in your top right corner of your screen now.